Hello, I'm Grace. An unexpected shock in the U.S. labor market has completely shifted the momentum of global financial markets. According to recently released data, U.S. employment in July turned downward, decreasing by 23,000 compared to the previous month. This employment figure sent shockwaves through the market, falling significantly short of the levels previously forecasted by industry experts. Despite the release of negative indicators regarding job losses, the financial market's reaction moved in the exact opposite direction of conventional wisdom. Reports indicate that as soon as the contraction in the labor market was confirmed, U.S. stock markets actually gained strong upward momentum. The most striking phenomenon was the S&P 500 index closing at a record high immediately following this employment shock. This paradoxical situation occurred because the market interpreted the employment data not as a sign of slowing economic growth, but as a signal for a shift in monetary policy. Analysts suggest that as employment figures deteriorate, the Federal Reserve, the central bank of the United States, faces significant pressure against implementing further interest rate hikes. In other words, expectations that job losses would alleviate the pressure to raise interest rates spread rapidly among investors. In the past, worsening employment data typically caused stock markets to fall due to recession fears, but currently, expectations for interest rate cuts are being prioritized. Ultimately, the market appears to be viewing the cooling of the labor market as a decisive justification for the Federal Reserve to halt its tightening policy. This demonstrates that the current market focus is extremely skewed toward the direction of monetary policy rather than the health of the real economy. As the possibility of a pivot in the Federal Reserve's monetary policy increases, investment sentiment that had been suppressed is showing signs of revival. In conclusion, this employment shock acted as a paradoxical boon for the stock market by quieting fears regarding interest rate hikes. Moving forward, the key to the market's direction will be how upcoming economic indicators act as variables in the Federal Reserve's interest rate decisions. I'm Grace, thanks for watching.